For more on potential investments around REITs, let's bring in Handel St. Just, Senior REIT and Home Builders Analyst at Mizuho Securities USA. Handel, good morning. Thank you for being here.
Good morning. Thank you for having me. Certainly happy to share our thoughts this morning on the REIT sector and the current backdrop of rising interest rates, slowing growth, and limited credit availability. But first, I'd say that, listen, we're not blind to the risks that you outlined that Diana spoke about, as well as concerns about a stretched consumer and another imminent rate hike. But we think the concerns are priced in at current valuations that REITs offer good defense in this uncertain backdrop and look attractive versus the S&P, versus their own history, and versus NAV. And while there are well-documented issues within certain subsectors, like office, most other sectors are doing fine fundamentally, a number of which I know we'll be getting into further. And lastly, it appears the Fed's almost done raising rates here, and so the headwind of rising rates should dissipate, and there's lots of capital on the sidelines waiting to get into the space. So we like the setup here.
And Handel, I wanted to ask you to dig into office a little more. You just mentioned it. We've been talking about it, obviously, a ton the last couple of months. We've seen a couple of buildings go back to the banks. We've seen some walk away. But how much worse do you think it's going to get when it comes to the hit on banks and the hit on investors in the office sector?
Well, that's a great question, and certainly one that still, I think, has time and risk involved. Certainly, what inning of this melting ice cube are we in? An environment where tenants want less space. People have been comfortable working from home the last couple of years. Financing is very challenging, and rents probably haven't stopped falling. But again, it's not an issue that I think affects most other subsectors. So it attracts lots of headlines, but office REITs these days are such a small piece of the overall index. And so we think REITs overall as a subsector have lots of good pockets of investment opportunity, absent what's going on in the office space these days.
So, Handel, obviously different REITs handle different areas, but as a broader group, how should investors look at them when it comes to valuation? You mentioned valuations are elevated, but also yield and long-term outlook. We just saw recently Crown Castle actually cut some of its workforce.
Sure. Listen, I think that depends how you look at valuation. Certainly, we think versus their own history on a multiples basis, REITs look pretty fairly to attractively valued versus the S&P. We think REITs look relatively attractively valued. Perhaps versus fixed income benchmarks, they look a bit more fully valued. But look, we think the sector offers good attractive yields here, 4% average dividend yields. The balance sheet's in a really good place. The payout ratio is relatively low. And there's a decent growth opportunity, low mid-single digits into next year. So all in all, a pretty competitive total return opportunity here at, again, a pretty low risk-adjusted basis.
You mentioned low yield, high return. This has always been a low interest rate play, the REIT sector, and that's why it did so well when interest rates were at zero. For the average investor out there looking at stocks to buy, why get into REITs when they could get higher interest rates perhaps somewhere else, higher yield?
Sure. Well, listen, again, I think that the current valuations, how we look at the space, suggest to us that there's a relatively attractive entry point. And so not oblivious to the rising rates impact, likely going to see another very imminent rate hike here. But again, I think that those issues are well known, priced in, fundamentals across most subsectors. I know we'll get into residential, storage, industrial are still very good, and there's pricing power and rental rate growth. And so I think when you look at it all in totality, in terms of the current relative opportunity, the risk of rates going up from here appear to be relatively modest. And again, that risk appears to be priced in against the backdrop of still solid fundamentals, still decent earnings growth. We think that for folks concerned about rising rates, certainly we acknowledge that and understand that. But again, given where we are in the rate hike cycle, given the opportunities we see it for competitive total return here, we think REITs are certainly worth another look and would highlight certain subsectors I mentioned before within residential, industrial, and other pockets, perhaps including healthcare.